Hello Market Club members everywhere. Well, it's Thursday, the 24th of February. We're rapidly coming to the end of the month. We only have a few more days left to trade. Of course, it's Easter, which means we're not going to be open tomorrow. The markets are closed, I should say. But we're looking at crude oil. Crude oil, as you know, we've been pretty bullish on it. But yesterday we had a signal right here at 40.41 to exit a position. Now, we use the daily, which is right here, as an indicator to get out and into the market. And we use the weekly for trend. So the trend still is up. So if I take everything off, take the weeklies, dailies off, you can see the weekly kicked in right here at 36.43 and is moving higher. Now the daily, which we use for timing, indicated a move out of the market, which gave us a nice profit on this position. So what we want to look at right now is some sort of consolidation or maybe a pullback. Two things are happening. We're right at the 50 line, which is support, and also we just went below the parabolic. You can see the parabolic has just moved above. That's the first time it's been that way for several days, but nonetheless, it's not necessarily a positive sign. The key level right here is this low, which is 37.71. If we go below there, then I think things have maybe changed a little bit for the moment. But potentially, if we look at a Fibonacci retracement on crude oil, this is the May contract we're looking at right here. We just click on the very high and drag to the lows. And you can see a 50% retracement is 36.63 and a 61.8% is 35.23. Now if we close below the line, the 50 line, which should be support, I would be not so surprised to see it come down a little further. But I think the market has made a major base to go higher in the future. So let's watch that very carefully, but you should be out of this market at the moment. Now this is a very interesting chart. This is the gold chart, and I'm going to put the dailies in right here. Just click on the daily right here, daily trade triangles. It shows you we got out of the market actually on the 21st, 3 days ago, at 1,247. Market's currently trading about $25 lower than that. And two things have happened. You've got a weekly trade triangle at 1,215, indicating the trend is down. So it doesn't matter if the monthly trend is up right now. It's the longer term trend, which kicked in right here at 1,143. It matters right now that intermediate term trend is negative and the daily is negative. So you should be short this market or just out of it if you don't feel comfortable. We're very under the 50 line, another negative sign. So I would not be so bullish on gold right at this moment. Looking at the Dow, you can see we actually had a signal, a daily signal, but more importantly, we went below the parabolic. Parabolic is now at 17,648, which is above the market. And I expect to see some sort of pullback in this market, which has really just gone straight up. It's satisfied, if you look at the chart, it's satisfied our upside count in terms of the pivot point. You can see right here we had this pivot point. Here's a low, here's another low, there's the pivot point. You just sort of flip this over and it takes you up to this area right around here. So I think we've satisfied that. Now the key thing is how far can this market come back. So let's just clear the screen and look at our Fibonacci again. This is a wonderful tool. I really recommend you get comfortable using it because it really does work very, very well. Okay, I've drawn in the Fibonacci tool. So this is a 38% retracement, takes you back down to 16,831 right here, and a 50% is 16,575. Now that sort of makes more sense to me to come down to this level, the 16.5 level, simply because it takes you back to these previous points here. So I think between 50 and 61%, that's where we're going to see this market come back to. I think there's a lot of stuff still going on in Europe with Asia, with the terrorism, and people are going to be very concerned this weekend here in the U.S. So let's move on. But generally speaking, you should be out of this market. It's a trading range 55. We've got a conflict between the monthly and the weekly. The weekly's still up, but the monthly is down, indicating a conflict, sideline position. What's interesting with the Nasdaq, this has been the weakest index, and you can see it's still above its parabolic line. The parabolic comes into 4,719 today if it hits there, but it's lower for the week, and that's the important thing to remember. I think we'll see more of a correction in all the indexes, but again, watch that level I just mentioned. You can put this in. This is a standard situation, a standard setting for parabolic, and it really works well. Okay, these are the S&P 500, the cash market. You can see we went below the parabolic today. We actually had a signal yesterday on the daily, but we talked about the market topping out, and I think that's a pretty good call. We are below the parabolic, and I think we're heading now to the 50 line on the RSI. So again, This is the end of the week. Of course, it's a short week because of the markets being closed tomorrow, but nonetheless, it's something to be concerned about next week when we come back and we see more traders in the market. And of course, depending on what happens in Europe and also here in the States. So let's take a look at that secret I was telling you about in terms of one thing you want to look at. So things you probably haven't looked at is the quarterly charts. And we're going to go all the way out and take out these various indicators. Now, what's really interesting with the quarterly charts, this goes all the way back to March 26, 2008. So it's a long, long time, over 8 years. So you're looking at a situation where there's the parabolic. This is a standard setting, nothing special. We moved over this line, and you see how we just stayed, this is the quarterly chart, stayed all this time, and then suddenly here, the last couple of quarters, we've gone below that. That's the first time in 8 years, so it's definitely something to look at and be concerned about. And you can do the same thing with the Dow, well, in fact, let's just do it with the Dow. Same thing with the Dow. You see the market came over here, and this is just pretty close to the lows. This is in April of 2009, and since then, April of 2010, excuse me, but then it moved up, and finally it's reversed and gone down. So that's something to really be concerned about in terms of the longer-term trend in the future. So, hey, I'm Adam Houston. Check out the quarterly charts. I think you'll find them very interesting. Leave the standard parabolic setting to see what you can find in the markets. Have a great Easter, everyone. Thanks for watching the video. Please make a comment on our social pages. We'd love to hear from you. If you have any questions about the markets, we always like to hear from you. So have a great Easter, everyone. I'll be back on Monday.